pandemic. And we are recording, just so you know, as well. Just a warning. So if you're on camera and, I don't think you're going to wind up on camera, just an FYI. My name is Matt Auger. I'm the president of the Central Mass CPCU chapter. Before we start, just want to go over a few quick housekeeping items just to ensure everyone has the best experience possible. If you haven't already done so, please be sure to mute your audio during the presentation, just avoids excessive background noise. We do encourage questions, however. We just ask that you feel free to use the chat function during the event for any questions that you have that you'd like to have answered by our speaker. If you're not familiar with the chat feature, you just have to scroll your mouse down to the bottom of the screen and the toolbar should pop up. On this toolbar, there's an icon with the word bubble displayed. All you do is have to click that icon and the chat feature should pop open. Simply type your question in there to everyone, or you can send it to me directly, either way. We'll actively monitor it and see what questions are coming in and definitely try to get to them as we go through. If we can't get to all the questions, which could happen, hasn't yet, but you never know, we'll be sure to post answers to those questions on our chapter website after the event. The event may be recorded. Well, it is being recorded. We've all been notified, and subsequently it could be posted to our chapter website for future reference. So just an FYI on that. And remember, if you did not provide your full first and last name when you logged in, you want to provide that to us so you can get your CE for CPCU credits. Sue Scavera has provided her email in the chat, so you can reach out to her as needed with that info. And with that said, let's meet today's speaker. So today we got definitely a claims specialist coming in, Steve Shiner from MAFPRE Insurance. Steve, welcome aboard. Thank you so much for taking time out to speak with us today.
Hi, Matt. Hi, everyone. Thank you for having me. Happy to be here.
Yeah, I mean, it's going to be, I think, a good discussion today just about everything going on with claims. And I know we had some great questions previous to setting up to this that people asked about with the pandemic happening. And, I don't know we're totally through it yet. I know case numbers, I think, are coming down again, which is a good thing. But I think a lot of that's led to a whole bunch of different questions regarding what claims is doing with the pandemic. But before we start, Steve, if you don't mind, you want to just give us a little quick bio about yourself? No need to get too personal, of course, but.
Yeah, sure. I'd be happy to, Matt. So again, Steve Shiner. My current role with MAFPRE is Senior Vice President of Operations. Previously, all of the roles that I served at MAFPRE throughout my 37-year career have been focused in claim. Starting out as a all lines adjuster and a field adjuster, supervisor, manager, working my way up through the claim executive ranks, ultimately as the chief claim officer for MAFPRE for about 6 years. And I assumed my most current role about a year and a half ago as part of a reorganization that we did at MAFPRE, where I have all customer facing operations. So claim operations, our contact center, premium accounting, policy processing, remittance processing, all of the insurance operations. So I still have a close connection to claims, but my role has been expanded pretty considerably into other areas as well.
Yeah, no doubt you're seeing all sorts of different aspects of it.
Yeah.
I mean, the one thing I think that we wanted to start with, and I know we're feeling this in my company, and I'm sure not just on the carrier side, all different sides, but I think the pandemic probably forced organizations to interact with their customers in different ways, different things that you may not be able to get to them directly or whatnot, and maybe there was different technology that you have to use. But how did customer interactions change within your organization, MAFPRE, and do you think it will continue? Things that, again, we talked about kind of direct to consumer type stuff for claim reporting, or things that you may have had to change where you could do it direct before and now you can't, just
Sure.
in general.
Yeah. So, we've been on a path toward, a digital transformation for several years. So fortunately, we had many things in place before the pandemic arrived, which I think helped us significantly. But when that day came that we sent everyone home to work from home virtually overnight, we, as I think virtually everyone, had to scramble to make sure that we had the technology and the tools in place to communicate with our customers and our agents and each other in a way that was effective. And so we getting back to your question, early in the pandemic, obviously, folks were locked down in their homes, weren't interested in having people come into their homes or even visit their homes to see a damaged automobile. So we pushed hard on virtual inspections. We have a tool that we call, it's a virtual inspection tool for automobile damage claims, EPICS. And so we saw that ramp up very quickly. We had been pushing hard on it for several years. Some customers would be interested in using it, others not, generally on the more minor damage claims. But when the pandemic came, we started using that, widely. And the Division of Insurance in the state of Massachusetts allowed us to do that, even on the more significant damage claims. So we saw that, I think upwards of 25% of our damage inspections were done virtually. We made a lot of other arrangements with customers that weren't comfortable with us visiting their homes, where we could see the car, without them being there, or at a parking lot. So, a lot of different tools and techniques were used. Same on the home side, a lot of virtual inspections, particularly on the minor claims. Obviously, you need to get into the home for the more significant claims, but in both cases, a lot of virtual damage estimation in those early days, which has slowed down, but certainly has ramped up well beyond where we were in 2019.
Do you see people still I know obviously having to adopt it's a challenge, but have people kind of stuck with it? Do you think, are you seeing people more I go back to driving appraisals. I remember I had one of those back when I had a claim way back in the day. And I drove my car in and saw people. But now, obviously, you mentioned new technologies to do that virtually. Have people kind of looked at it and said, I kind of like this better than the old process of going to the drive-in? Are you guys seeing more adoption of it and people sticking with it?
Absolutely. So early in the pandemic, we were forced to shut down our drive-in appraisal centers. We had 6 or 7 of our own in the state of Massachusetts. Many of the IAs that we use also had drive-in appraisal centers, and the virtual inspection became a very good substitute for drive-ins. And quite honestly, there hasn't been an appetite to reopen them. We have more or less shuttered the 6 or 7 that we were running. We did maintain one locally here, and there was so little interest in it. I think we were seeing, 3 to 5 people visit it on a weekly basis. It just didn't make sense to staff it any longer. So, to your point, I think virtual inspections have more or less replaced the drive-in appraisal. Some of our IAs still have, on location setups where policyholders can visit if they have a drivable car. So some of that is still being done, but by and large, drive-ins have gone by the wayside for us.
Wow. Is a lot of that truly people just taking the photos of their own car, really, when a loss occurs?
Absolutely. Yeah. We've made it quick and easy. I'm not sure if someone had a question there.
No, I think we're good.
Can everybody please mute? Joanne 4, please mute.
Yeah, go ahead.
Yeah, so,
perfect.
Yeah, customers have really adopted new technologies. We see it even with the premium payments. We were at X amount paying us, with a paper check. That has ramped up significantly, and I think it crosses all age groups, where folks sitting at home spent more time becoming a digital native. And I think we significantly increased the number of customers that we have paying electronically from where we were pre-pandemic. So I think a lot of folks are doing their banking more comfortably electronically, and more willing to use the tools that we have to offer that enable self-service. And I know some of our agents get involved in helping our customers with the virtual appraisals, taking photographs, walking through the process on the application that we deliver. So yeah, I think it's been widely accepted, and that's been one of the good things that I think has come out of the pandemic.
So even on the home side, so if you have like a home claim, they're taking pictures of the home, or I don't know, drones is a big thing too now. So I don't know if you see claims using drones as part of that for the more of a virtual look than actually in person.
Yeah, we've toyed with drones, but to be honest, the use case is pretty narrow. And one of my colleagues said to me, drones are the best thing that's come along in a long time, waiting for a good application. I think in large catastrophic events where you need to do flyovers to see what you're dealing with, by all means, they have value. Certainly looking at rooftops so that people don't have to climb ladders. They can be fairly precise in terms of looking at the damage of a roof. So that is a good use case. But the tool that we have that we share with our policyholders is similar to the ePICS on the auto side. We call it ePICS Home, and it walks them through the process of taking photographs, taking measurements. There is a video component to it. And in some cases, what we'll do is we'll set up a video inspection with our appraiser sitting in his home or office, walking the customer through the process so they can have an exchange. And once that's complete, the field property adjuster will write the estimate based upon that video and the photographs taken. So yeah, it's very effective.
And I'm sure you do metrics and all sorts of things on customer feedback on that. But so overall, they've been pretty happy with, the fact that they're doing a bit more of this appraisal type stuff or damage review type stuff they did in the past. They've been pretty happy with that.
Yeah, I think it runs the spectrum, Matt. Some people enjoy doing that sort of thing and embrace technology. There are some that say, I'm paying X amount for my insurance. I expect you to come out and do that work for me. So it's not universally accepted, but I would say it's widely accepted and certainly growing. It's faster. We turn around automobile appraisals done on ePICS within 24 hours. We do the same on the home side. So it may require a supplemental inspection, but at least we get that initial inspection done and the scope of the damage sized up pretty accurately and get the ball rolling. So yeah, absolutely. These have been very effective through the pandemic, and I think it'll continue.
It kind of brings me to like the next thought that we had on this. The question we had on this was, did the pandemic bring about changes in customer service expectations? So you just mentioned, 24-hour turnaround times. Everyone, I think just in general, just the way with everything that's moving the way it is with apps for all different stuff. And I know we've talked about in the past, the InsurTech stuff, everything is like instantaneous, practically. You can get everything right away. Did the pandemic bring about changes in customer service expectations that you saw in claims? I know I'm going back a little ways when I was a claimant in claims and service center, like, oh, your adjuster will be assigned within a couple of days, and it was, 4 days or whatever it was. I'm assuming that's not the way it is now. And did the pandemic bring about a lot of that? And if so, do you think it will continue?
Yeah, I don't know if it's been entirely driven by the pandemic, but certainly having patience is a thing of the past, right? We all expect things to be done very quickly. If we send an email, we expect a pretty quick response. Text messages even quicker. So we have enabled all those capabilities, and we need to make certain that we're very responsive. But I do think the pandemic has sort of heightened expectations. During the lockdown, people certainly had plenty of time to, if they had a claim, make certain that they were on top of it and communicating with the adjuster and expecting things to be moving quickly. And I think we delivered on that. I'm very proud of how the claim team and, the entire team rallied very quickly to figure out how to work from home with new tools and how to communicate with each other and others very effectively. I think we didn't miss a beat. And, the customer surveying that we do, NPS, CSAT, was very strong throughout the pandemic. We were helped a little bit, certainly by lower frequency, especially during those early times, so that we could really stay on top of things. But there were a lot of challenges that came along with it as well. And I think by and large, customers were very pleased with our response. In fact, at one point, I collected a lot of customer feedback that we received that was very specific to the pandemic, where they would say things like, I know how difficult it is with what you're going through with this pandemic, and I really appreciate how you did this or that. And we put together a communication that we shared with our employees that, is really heartwarming. The customers that we deal with really appreciated how people delivered, especially those folks that were out and about and in the field and visiting their homes and seeing their automobiles. So I think it went very, very well.
Do you think claims in general has gotten more efficient because of the pandemic? Just like not just MAFPRE, but any company. Do you think overall it led to some improved efficiencies? Do you think maybe they were coming already, or maybe it didn't really change much of how efficient they were previously?
Yeah, I mean, I think it probably has accelerated the pace of, efficiencies. Obviously, we're all working hard at getting more efficient, trying to lower our costs. So there has been an evolution. If I think back, 37 years when we were using, we were sharing one computer at the end of the aisle to look up policyholders. Everything was on paper. I mean, we have come miles since then, but every year we make incremental improvements in the way we conduct our business, handle investigations, communicate with policyholders. And I do think the pandemic has accelerated some of those capabilities. I mean, we learned a lot. I think we all have, whether in the insurance industry or any industry, with the steps that we were forced to take to continue operating our businesses during the lockdown. And whether it's virtual court appearances or virtual mediations, just collaborating with one another, whether it's over Zoom or Teams or any of the collaboration tools that we enabled as part of the response to the pandemic. Certain things we have taken away from that will continue to be part of the way we work. So yeah, I think it definitely has, and there's been a strong appetite for digitalization, self-service, more efficient processes, and we've been driving hard on that. So absolutely.
Yeah, that's one I'm going to get into in a second, but I see we have our first question. Jen Morton raised her hand. Jen, fire away.
Hi. Yeah, so on this topic, we're talking about the e-Pics and the e-home and sort of efficiencies. So do those products, the e-Pics and the e-home, lend themselves more to straight through processing, which I would assume is creating efficiencies?
Yeah, Jen, I didn't expect to get any difficult questions from coworkers, but thank you for that question.
You're welcome,
That's
Steve.
tough. We can't check the in person.
No, I'm kidding. It was a good question. Yeah, I think it absolutely does. We have a vision, as most of, I think the industry does, about getting to a touchless claim, right? And every step that we make in that direction of enabling customers to self-serve and enabling our systems to process tools without human intervention brings us one step closer to that touchless claim experience. And we may not be able to, deploy that capability on a large number of our claims, but even if it's a small percentage, that's a significant efficiency gain. So, if we have a customer that's reporting his or her claim using our online reporting tool, there are capabilities within that platform that allow customers to self-serve along the way, select how they would like to have their vehicle inspected or repaired. They might select our Car Easy solution, or rather our e-Pic solution, which would walk them through how to take photographs of the vehicle. They upload that, that it then goes into our system. We're not currently at a point where, that happens, in an automated fashion. We need to have an appraiser look at the photographs and prepare a damage estimate today. But we're working hard with our estimation platform provider to bring that to the next generation and actually write some of the appraisal for us, and ultimately getting to the point where it writes all of the appraisal for some segment of claims. So absolutely, that is a key step in the process to straight through processing, Jen.
Thank you.
I mean, that
Thanks for the
leads
question.
itself, yeah, that was a good one. It leads itself to another question, which I think is a pretty big one with everything going on. You mentioned digitalization and all those things. I mean, one of the things, obviously, you're dealing, I think, with a diverse segment of the population too. I mean, you have baby boomers to millennials to all different types, and I assume different types have different technical abilities. I mean, I was just joking around earlier about the fact that I figured out how to share my screen without this thing popping up on my computer, but it must be, I assume there must be some challenges on the claims end when you're trying to approach these populations differently with a lot of the digitization you're using. Have you run into that on your end, and how have you kind of handled that or tried to work towards making it easy, not just for the digital native, like, you mentioned before, but also people that aren't really digital natives?
Yeah, no, it's a great question, Matt. And I think, our approach has been, we need to work with our customer on their terms, how they want to work with us. And we know that there are still a large number of policyholders, when they have a claim, they want to speak to someone on the telephone. And that ranges, across all demographics, all age groups. Think about it. It's not that often that you have an auto accident, hopefully. And if it's an accident that involves injuries or significant damage to a car, that's impactful to your life. And, you sometimes want the comfort of someone walking you through the process and telling you how things are going to unfold and setting expectations. So it depends on the individual. It depends on the nature of the accident or the damage to the home. There are so many variables, and we are approaching serving our customers with the idea that we need to have an omni-channel solution, so that if someone wants to send us a text, we can digest that into our system and respond in kind. If someone wants to communicate by email, we have that option. If they want to talk to us on the telephone, we make ourselves available to do that. We never see ourselves as being the Amazon of insurance carriers, where you never interact with a human being. People want that, and that comes out loud and clear in our customer surveys. We see it in the JD Power reports. When people have a traumatic event in their life, they want to talk to a human being.
Yeah, no, I mean, luckily I haven't been in too many accidents in my day, but I was involved in one before I was ever in insurance, and you don't know what to do. You have no real clue if you're not involved in it. So I agree. I mean, a big part of the reason, independent agent channel pasture is so strong. I mean,
Well, that's a great point.
They need someone to talk to. It's
Essential in the process.
Absolutely.
At the same time, we are trying to enable, as I mentioned, in the omni-channel, there are minor accidents where people don't want to get involved in a 20-minute conversation reporting the accident, so they can do it online. They can almost probably, in fact, today we have solutions that can get from start to finish with a repair, payment, without really having to the need to interact with one of our staff members, but we're there if you need us.
Yeah, it all works together. I mean, that's what it comes down to. It's especially apparent. So obviously, we've seen this. I know at my company, I talk to our claims manager every once in a while, and he's brought this up with the pandemic, and not even just that. To be honest with you, it's like with the supply chain issues and inflation, all sorts of all of it hitting at once. The big question, I guess, is how has the pandemic affected you, and whether or not you have or haven't need to be flexible with coverage limits? I mean, some of the ones that popped up that I just know I've heard of, and again, I'm not in claims, I'm in underwriting now, but I've still heard of it, is, hey, rentals. Sometimes it was tough for insurers to even get a rental car, or sometimes it was tough to get the parts to fix the vehicle. Have you guys at MAFPRE, or have you run into situations where you had to look and say, well, that's the policy limit, but maybe we need to be flexible? Is that something that you've run into on your end due to pandemic related issues, or even inflation or something like that?
Yeah. So, I mean, the contract is the contract. And, the way we look at things is, we charge a premium based upon actuarial indications that say, this is what you get for this amount of money, and that's how, the pricing works in insurance. And if we begin to expand on that, obviously we're going to be in trouble in no time. So we have to abide by the contract. We have to make certain that our teams are paying what we owe, and no more, no less. But sure, there are exceptions occasionally. If we created a situation that put our policyholder in a situation where it delayed their claim, and we need to make a concession, I can't say that doesn't happen. Of course it does. But by and large, we're able to, provide the coverage that our insured purchased. And the trick is managing that. It's really all about communication. So we all know what's going on in the world. We're all very familiar with the supply chain challenges. It's not just affecting the insurance industry, although I have read that it has impacted the auto repair industry unlike no other. But we know this, and customers understand it. The key is communicating with them upfront and letting them know whether it's an auto claim or home claim. These are the things that we're experiencing in the marketplace. One of the things that we do is, and we've shared communications with our agents to make sure that they're aware of these challenges and they can coach and counsel their policyholders. If you have a damage claim and your vehicle is drivable, safely drivable, choose the shop that you're going to have repair it, let them order the parts, make sure the parts are in, and when the parts are in, schedule the repair, ideally on a Monday or a Tuesday, so that those repairs can get started in earnest early in the week, and we're not crossing over weekends, because there are delays that can cause the rental coverage that someone has purchased to expire before they get the vehicle back. And that's a worst case scenario for us. We don't want to see that happen. So we're very clear up front, whether in our contact center or the assigned adjuster, drivable vehicle, let's make sure we get that vehicle inspected, get the repair parts in. And that's one way that we control cycle time, give the customer a good experience, make sure that their rental doesn't expire on them. And we do have a sort of a triage group. When the pandemic hit us, we started meeting our APD group, auto physical damage, and our material damage group, the ones that do the work out in the field, appraising and negotiating with body shops. They were having daily meetings initially. And then I think it expanded to twice a week. And now we've continued them weekly. And that group working together has navigated a lot of challenges. And this is one of them. What is the best way to make sure that our policyholders have a good experience when their car is damaged, need it repaired? And as I was mentioning earlier, we have a triage team where if something is going astray, if there's a part that can't be made available, if someone's rental is getting close to expiring, this team is working very hard to triage that situation, using our network to find that part. I can think of a claim a few weeks ago that someone mentioned to me where the car had a lot of damage, it was fully repaired, ready to go, except for replacing a seatbelt. The shop couldn't release the car without that seatbelt being replaced. So, we reached out, used our network, found that seatbelt eventually, and, got the car back to the customer. But, it wasn't without, doing some backflips to make it happen. So we triage these things as they come up, and we try to deal with them as one-offs.
Yeah, it's been tough. It's funny. Luckily, being in the industry, I can kind of think about some of these things, and I just think it was like, oh, how much do I have for rental? I mean, I want to look and adjust that. So I think, with the pandemic, some of that stuff's really kind of opening up people's eyes of at least having the discussion, with their agent or whatever, to say, oh my gosh, I don't know that my coverage is, before it may have been tough to sell that. Now I would think people are kind of like, I really need to buy. Well,
that's that. I'm glad you mentioned the rental. The other thing that we try to do up front is coach the policyholder. Let's say they have a $500 rental limit, a $600 rental limit. It looks like you've got some pretty good damage to your vehicle. This might be a 20-day repair. you want to get in a lower cost rental vehicle so that you can maximize the term of your rental. If you get into a $40 a day rental car, you're going to have fewer days available than if you get into a $30 a day rental vehicle. So those are also the kinds of things we try to communicate up front.
Yeah. Yeah, like you said, communication's big. I mean, especially with some of the changes, things that have just changed just in general. You know, looking at used car prices, it's funny because we write used car dealers, and it's funny just looking at websites and how much they're worth now or they're selling for it. It's unbelievable. Part of that, I'm sure building materials going up. I mean, I'm sure on the claim side, you guys are seeing a lot of just inflation on values and stuff like that you're having to work through and things of that nature.
Yeah, I would say that's our biggest challenge right now as an organization, and I think it's true of all insurers across the country, is severity. Severity,
for property especially. Oh, so go ahead.
Yeah. I mean, severity has hit us hard. Price increases are everywhere. Labor shortages are everywhere. You mentioned the price of used vehicles, the price of new vehicles. The frequency of total losses has actually gone up countrywide pretty significantly. 4, 5, 6 years ago, total loss frequency out of all collision claims ran around 16, 17%. It's up over 20% now countrywide. So more vehicles are being totaled. Today's newer vehicles have many more expensive components on them that are more expensive and take more time to repair. And, couple that with the increases that we're seeing in severity as a result of the increase in new and used car prices. I think in 2021, countrywide, total loss severity was up 27 or 28%. That's significant. We certainly didn't contemplate that in setting our rates. So, and we all know why, right? If you've tried to go out and buy a used car recently, if you've been lucky enough to find what you're looking for, the sticker shock has probably sent you running. New cars, same situation. The chip issue and the chip shortage has really rocked the new car market, which has obviously driven the used car market. But who knew there were over 1,000 chips in the average automobile until this chip shortage came about? But it's obviously caused a lot of impact on the severity side in auto insurance.
Yeah, and I'm sure a lot of those. I mean, I've joked about this even in previous lunch and learns of like what the stuff cars do nowadays. I mean, I have a Hyundai, which is not a serious luxury brand vehicle. It's not a Mercedes SL, whatever the heck it is. But I mean, even that, it has the lane assist where it can kind of drive itself, and all the sensors and everything that go into that, and they have to be specially calibrated every time something happens. It's just, you can really, I think you definitely can see it just in your regular vehicles. I mean, a lot of vehicles now are coming, I think, standard with backup cameras with the rear collision alerts and all this fun stuff. So yeah, all that I would imagine goes into like you're talking about, the severity aspect. And it's actually a great question that we had for today, was talking about frequency, severity, and kind of results from the pandemic. Because I think back, while the pandemic was going on, I don't think it's any big secret. We saw, in things about companies, returning premium and all that. And part of that was frequency being down, which obviously it was, because people were in lockdown, so they weren't going anywhere. But the one thing I know I saw, and I'm sure it was out there, was that, frequency went down, but it seemed like severity was going up, not just for the car, the impact of the property of the vehicles, but also injuries and things of that nature. Were you seeing a lot of that? So while frequency may have gone down, which is good, were you seeing that severity was kind of making up the gap? Maybe it wasn't making it up, but I don't know, I don't think it was maybe going over the gap in frequency. What were you seeing from that?
But how much time do we have, Matt?
Yeah, all right. We'll go get to it. I know I could talk about this one for a while too.
No, So as everyone, I think, on this call probably knows well, the lockdown, the early stages of the pandemic had far fewer cars on the road, far fewer miles being driven. And that's what resulted in many carriers having loss ratios that were far better than predicted, and returning some of that premium to policyholders. That continued for the most part throughout 2020. Frequency was off about 25%, I think, countrywide on the auto side. Not much impact to home. And then 21 came, and I guess I can't use the word post-pandemic because we're still in the throes of the pandemic. But as we all know, people started returning to the office, and people started returning to activities, going out for dinner and socializing, and frequency has picked up. Throughout 2020, we've seen miles driven increase exponentially month over month. We're not back yet at where we were pre-pandemic in terms of frequency, and I think that's true of the industry, because people are driving differently. How they drive, when they drive, still different, because we've got a lot of folks that are working fully remote. We have folks that are working in a hybrid model, and I think that's probably pretty consistent with most other insurers. So you've got some number of people that aren't commuting to work every day. And if you take those folks off the road, obviously frequency is going to be better. Severity, that's another story. We have seen sharp increases in severity, sharp increases in the severity of injuries and accidents. So, the cost of vehicles to repair, the cycle times, more rental, that's obviously contributing to severity. But as I think a lot of folks have heard and read, driving behaviors are different. I think there was a real lack of enforcement for a long time. And I mean, I can't say that I'm a slow driver. I get on the highway, I want to get where I'm going. Sometimes I'm probably going a little too fast, but there are cars going by me like I'm standing still. And these behaviors are not something that I think we saw to the extent that we're seeing them today pre-pandemic. So these wide open roads had people developing bad habits, driving faster than they normally would, weaving in and out of cars. All of these things are contributing to more severe accidents, more severe injuries, and it doesn't seem to be slowing down. I think an article was published recently by the National Highway Traffic Safety Administration that showed us fatalities on the highways in the United States have increased 16% from a few years ago. Pedestrian fatalities are up significantly. So distracted driving, aggressive driving, despite all the great, accident avoidance systems that are in vehicles today, are still contributing to some pretty bad severity when the accident does happen.
Yeah, sometimes you wonder if like all those new devices get you, maybe lull you into a sense of like, oh, nothing's going to happen. I can fool around and check my phone because my car is doing whatever it's doing, driving itself, or I have all these sensors. And yeah, I could definitely see that happening. And you mentioned it just anecdotally yesterday, as I mentioned before we started. I was out in Western Mass. I drove back home and I go on the highway, the Pike. And I mean, anecdotally, probably 7 years or so ago on the Pike, if you were doing like 75, you were pretty much maybe going with a little over with traffic. You were going kind of quick. I was out yesterday, and I think at one point in time, I wasn't paying much attention. I was doing 83, and people are still, like you just said, flying by me. I'm like, whoa, wait a minute. I'm going too quick. So I think just anecdotally, I mean, I think you can kind of see that. And just, people driving, especially the Pike, it definitely was eye-opening for me.
You mentioned windshields earlier. That's sort of an evolving challenge for auto insurers, where certain glass, particularly on unique vehicles, older vehicles, not so much windshields, but side panels and other, are very difficult to find. And we've had situations where someone has a glass breakage, need a certain glass panel, and it can take weeks to find it. So that's been a challenge. But you mentioned the S-Series Mercedes earlier. I was just reading a report the other day. The S-Series has the new augmented reality windshield, with heads-up display that provides information on something like 12 different collision avoidance systems, as well as, navigation and speed. Think about the cost of replacing that windshield. Think about the cost of calibrating that windshield. So today, it's not just replacing a windshield anymore. Something in the order of 40% of windshield replacements today require recalibration. And it can be different types of calibration. It can be in the shop. It can require a field test. And this comes at an extra cost on top of the windshield itself. So we're seeing rapid escalation in windshield replacement costs, and that's not going to slow down. They're predicting that in the next 3 to 4 years, 70% of windshields replaced will require recalibration. So a lot of evolving costs.
Yeah, we're not going to get into it here because, like you said, we could probably I could talk about freehands. I'm sure you could too. But Massachusetts is a little interesting. I mean, my company we're in other states. That's because I'm not moving in my office apparently. There we go. But other states, there's a windshield, there's a deductible. Your comp deductible applies to your windshield. Massachusetts are mass mandatory; it doesn't. So it's an interesting difference, especially as you talk about windshields getting more and more expensive. I've seen it just on the underwriting side from looking at previous losses. Windshield for $1,800 is not really all that surprising, depending on what you're looking at for the sedan type vehicles. That's another one that people don't quite think about it, but it's those are expensive.
Oh yeah,
sure.
yeah,
big time.
yeah. In the states where we have windshield deductibles, our average severity is significantly less, and it's largely because folks are willing to repair windshields and aren't looking to replace them in all cases, since they have obviously some skin in the game.
Yeah. Oh, go ahead.
No, I was saying, we certainly encourage windshield repair when it makes sense to do so, when the damage is something that can be easily repaired without, causing a cosmetic defect. And why that's helpful is it doesn't generally require recalibration. You're not removing the windshield or making any significant adjustments to it, so you can avoid, the work that goes along with that. But
yeah, God forbid you miscalibrate it when you're putting it in, and now you're trying to rely on those systems. I mean, that's
exactly
all sorts of things that can go wrong with that. But yeah, I'll try to get off this subject because I agree with you. I could talk about it forever because there's a lot of interesting stuff coming down the pipe, I think, on this.
Yeah,
that people are really going to have to consider. I'll get into it again, so I'm going to avoid it. Let's move right on, otherwise I'll get stuck on the subject. But I really wanted to touch on one of the big things, that we've seen, and I'm sure you have on your end. I'm sure agents are seeing it. Everyone, I mean, retail, you name it, everyone's seeing it. Can you describe have you identified any impacts to your organization from the Great Resignation, as they like to call it, or some people call it the Great Regret? I'm thinking more people will call it the second one, because I'm still trying to figure out. I was talking to my wife a couple of days ago. I'm like, the stuff is so expensive, yet people are not working. I don't know how that works. Seems counterintuitive that we can't find people to fill roles, and prices are going up. But so on your end, have you guys run into issues with that, and how you kind of working through it?
Yeah, we sure have. And so let me back up a little bit. So, we as an organization, early in the pandemic, I would say in, I'm losing track of the years now, but, we wanted to get our teams back into the office for all the right reasons. We think that being together and collaborating, fosters learning and the development of good ideas and just driving our business. And, from our CEO, right through the management ranks, we wanted to get our teams back to the office. Obviously that view wasn't universally shared. Some people enjoy working at home. Others want to be in the office. Some want a combination of both. But we wanted to get folks back in the office in some capacity. And we quite honestly pushed hard on that. And we were probably one of the earlier companies to try and return our teams to the office. And we had some, pushback from that. And, what the pandemic brought is a lot of opportunity for folks to work anywhere. work for companies that are based on the West Coast from their home in central Massachusetts. So we did have and did experience a lot of turnover, and we very quickly changed course and said we can't lose our talent. This is the most important asset that our company has, and so we have been more flexible with how we're running our operations today. We allow our claim associates, the folks in our contact center, to work fully remote if they choose to. Most positions, as long as it's not a in-office requirement to do your job. And we found that enabled us to recruit and retain much more successfully. We've worked hard to make our office space more appealing so that the folks that are interested and willing to come into the office, at least, part-time or in a hybrid model, find it more inviting. We've modernized our space. We've, freshened up a lot of our office space with new office furniture, more open space, more collaborative settings. So, we think that's the way that we want to work going forward. But we had to make that course correction in order to provide the flexibility that employees are looking for today. And I'll tell you, it has been really interesting. We have developed a much more, I think, diverse work group. We started it in the contact center right away. We have people working in 20-something states for us today in the contact center. We're able to, interview, on board, train, all virtually. So we've gotten very good at that, and we've had very good success, first in the call center and now in claims. I would say claims, the recruiting of talent has been more regional. We do have some folks that are somewhat long distance, but most of the folks that we're bringing on are in the Northeast, and it works quite well. We've been able to fill our open positions. We have a lot of new folks, so we have a fair amount of inexperience at the moment, but we're in a much better place than we were a year ago. And I think we've done the right things. People are looking for flexibility today, and we need to be responsive to that.
Yeah, and I think too, I mean, not just it's not like just one company. I think the industry, we talked about in that. I was at one of our company functions when I started here, and I remember sitting down, and everyone here, 50 years, stand up, and probably half the room stood up. And when you look at that, you're like, wow. I mean, there is a lot of people that are coming to retirement age. So for the industry, I know we hear it all the time too. It's, well, how do we generate new people in the industry and get them interested in it? And I think, I was just interviewing someone for a role here, and that was, that person was very interested in insurance and underwriting. And I'm like, well, I tell you, picking a great industry to get into, because we need people. It's interesting. It's really something that, is a solid career choice, I think. But are there things, plans or programs that you at MAFPRE or in claims or wherever it may be are looking to put in place to try to get more interest from, maybe college grads or people that, maybe left their previous positions? We hear about this with the great resignation, is I'm leaving my job to go do something entirely different. Are there any type of programs or things you're looking to put in place to try to capitalize on that?
Yeah, well, I think, we're always active in on-campus recruiting. We have been a company that I think has very much relied on our training capabilities, bringing new talent into the organization right out of college or right out of high school, and training them to do the job that we need them to do, and giving them opportunity to progress within the organization. We have so many success stories about people that started in an entry-level position and are in executive positions today. And, I think those opportunities continue, but I think you make a great point. This is a great industry. This is a really good business to be in. And I think it's largely undersold. And I think, we, the leaders in insurance, part of the CPCU society and network, we need to be promoting careers in insurance. We need to be the evangelists, because it's an interesting business. And it's a business that allows us to do things that, provide real value, and I think make us feel good about ourselves. We're helping people. We're helping people, particularly in claims, in some cases in the most difficult time in someone's life, whether it's helping them recover from a home fire or a tragic accident, or just getting them back on the road so that they can, carry out their, daily lives. I think people find that rewarding. I know I do. And that's people want meaningful work. Well, we certainly have it in the insurance industry, and we need to be, better promoters of the careers that we have in insurance.
Yeah, no, absolutely. I mean, the carrier side, we talked about, like when I had that interview with he was relatively out of college, and, just talking about, hey, there's marketing, there's actuarial, there's product, there's underwriting, there's claims. Depending on what you like, there's so many different things. But that's just the carrier side. Then you have the agency side. Now you have, well, you're dealing with the public directly. You're going over coverage forms, explaining to them how to do. It's like you can go so many different directions and do so many different things. It is. I firmly believe that. I remember before I came into insurance, like probably most people, I was like, insurance companies. And then you get into it and you realize it's like, it truly is a great industry that really does provide a lot of good. I mean, next time you complain about insurance, I always say this when I'm talking to people, it's like, well, try to get a mortgage without it and see how you do. It's critical. It's very important.
It's so true. So true.
But yeah, but anyway, I could go on about that one for a while too. So I'll try not to go down that rabbit hole. But
yeah.
Have you been seeing has there been any impact on the auto body or the repair shop side, do you think, regarding the whole resignation situation? And are you working through that?
Yeah, I don't think there's an industry that hasn't been impacted by labor shortages, the Great Resignation. I don't know where all the people have gone. It's one of the looming questions that I can't answer. But yeah, for sure. The shops that we work closely with, they're all experiencing the same things that we're experiencing, trying to get open positions filled. We have a very strong auto body repair network, very good working relationships with, we call it our Car Easy network, with these folks. So we've been able to work with them to deal with the challenges that come. Some of them might have a particular challenge where they've got more work than they can handle, and we can work with them to offload it to one of our other shops. They've been very cooperative in terms of helping us load balance so that we can get policyholder vehicles repaired. We're in this together, and no one wants to lose work, right? But if you can't deliver and get the work done, you're not going to have a very happy customer. So they've been, very, very good about working with us to help us do the right thing so that we can get our insurance back on the road. But yeah, they've certainly dealt with the labor shortages. I am told, I was talking to our head of material damage recently, that things seem to be settling down a little bit in that space. So that's good to hear. And maybe, I don't know, maybe people are coming out of the woodwork that thought they could retire and now need to get back to work and, are filling some of these roles. I'm not sure what it is.
Yeah, I'm with you. I still kind of wonder where people disappeared to.
Yeah.
But that's a big question mark. Have you, or has it ever been talked about? And it's more of a curiosity than anything when we ask for questions. But any interest or any thought of working with shops or things like that or vocational schools to try to help the repair industry find people? Did that ever pop up, or was that ever just thought about?
Yeah, absolutely, Matt. Actually, I'm glad you asked that question. We might be a little more selfish in that we do work with the vocational schools. Every year we work with several in the area, and we donate salvage vehicles to the VocTech schools that have body shop programs. Our material damage team gets very involved in this program that we have, so that at the end of the school year, when they've repaired a vehicle, there's sort of a celebration and a sort of an award ceremony. So we do work with the VocTech schools to help them help their students, get more proficient in the field that they've chosen. We've also looked to these groups, and we have meetings at the Voctech schools introducing them to insurance and careers in insurance. And we've onboarded some of those folks that become appraisers in our organization. So they understand vehicles and the components that go into them. So with some training and taking the appraisal licensing exam, which we help them with, it tends to be a really good source for those appraisal roles. We also do some training, with the shops, with our staff and independent appraisers, where we bring in ICAR training. That's an auto body industry group that, provides training on various things, whether it's how to repair the new F-150 that's, largely made of aluminum parts. And it enables them to get continuing ed credits and certification. So we did a lot of that pre-pandemic. I will tell you that it sort of faded during the pandemic, but it's something that we're planning to get more rigorous around as we move forward.
Cool. We do have, we're actually getting up on time. We got like 3 minutes, but we have another question. It's from Jen Morton again. Jen, have at it. What do you got for us?
I know I'm hesitant to ask since we're so short of time, but my question is relative to, this topic on, the auto body shops having difficult time to fill their staff. Is some of those reasons because of what you just said, Steve, that the vehicles today are not like they were, 5, 10, 20 years ago. So having the skill set to repair them is much different than it was.
Yeah, Jen, I'm not really close enough to the repair shop, the auto industry to answer that with precision. I think there's probably a variety of reasons. There are a lot of opportunities out there today, and maybe some of these folks are finding opportunities that are more appealing than getting into the auto body repair industry. I don't know that the different components and the challenges that come with repairing today's vehicles would be a deterrent. I think that would be a challenge that would be welcomed by most folks in that field, but yeah, I can't say for certain.
Thanks, Steve.
That's a good thought, though. I mean,
thanks for another good question, Jen.
Yeah, with the Teslas, the electric cars, and all that stuff, I got to imagine there's some education aspect on the repair shop side that they have to kind of get boned up on.
No question about it.
Yeah, or at least be aware of and be prepped for it. Well, we got about a minute left. I tell you, it went quick. If we have any, I don't see any questions in the chat at this point in time. We do got a quick minute. If someone wants to mention or bring something up to Steve, I see Lee's on there. He had a couple questions with the last event. How you doing, Lee? Good to see you. Feel free to open up.
Thanks, Matt. I just want to thank Steve and our partners at MAFPRE for working closely with us through this challenging time. That side of the organization has performed fantastically through this period, and we couldn't have made it without them.
Hey, thanks so much, Lee. We really appreciate that.
Doing a good job there. Well, I don't see any other questions in the chat. I don't see any hands up. So I'd just like to say, hey, thanks so much, Steve. We appreciate it. I know you took time out of your day to do this, and you got a lot of stuff going on. So our chapter appreciates it, and it's always good to go over some of the stuff. Again, I could talk for hours on some of the stuff, but I got work to do too, and I know you do. So I'll leave it at that. Thank you very much. Thank you, everyone that came on. Hope you found this worth your time. It was good to see some people I haven't seen in a while too. So with that, I'll leave it to everyone else. And again, thanks so much, Steve.
My pleasure. Thank you all, and have a safe and happy Memorial Day weekend, everyone.
You as well.
Thanks, everyone.
Thank you. Thanks, Steve.
Thank you. Thank you, Steve.
Pleasure.